some advice that may serve you well in 2010, don't forget about risk as money cascades into emerging markets, gold and bond funds, and investors grow more confident. Mike Aronstein says the warning signs are flashing. Mike is portfolio manager of the Marketfield Fund and president of Marketfield Asset Management. He called the housing crisis early, and he was early to call the market rebound this year. Mike is here with us this morning. Mike, let's talk about this. In the one case of emerging markets, people are very, very enthusiastic about the prospects for growth. In the case of gold, they've made a killing this year betting against the dollar effectively and protecting themselves against inflation at the same time. And money is just pouring into credit. People see it as a safer bet than equities. But is this sort of notion of safety gone a bit too far there?
I think these are all thematically related by people's distrust of the U.S. economy. That's really the one point of controversy remaining globally, I think. Global investors are dramatically underweight the U.S., and to the extent that they have money here, they've hedged out the dollar risk. I think the skepticism that still exists now presents some opportunity. I would guess that U.S. equities for the next quarter or so are going to be the best performing big asset class worldwide. And I think to the extent that there's risk in markets in general, it's probably centered in emerging markets, commodities, foreign stocks, and to some extent the bond market, but more on the interest rate side than the credit risk side.
Why would U.S. stocks outperform if, as you acknowledge, everybody's down on the U.S. economy? Surely there has to be some recognition that there are earnings prospects here for people to pile back into stocks.
Yeah, I think that's going to be the biggest surprise over the next quarter, is the degree to which this earnings rebound accelerates. And I think we're going to have almost shockingly good earnings from the S&P, particularly compared to the rest of the world. And people's expectational levels here are still very, very modest.
What's going to be the catalyst for some concern about the emerging markets, the BRIC countries, for instance?
Well, I think a lot of people have invested through media that include the currencies. And it's almost been a one-way bet in the currencies and the equity markets in
just
EM.
Look at the real.
Yeah, a lot of your performance has come from appreciation on the currency side, and people forget that in a reverse flow, the liquidity and the stability of these EM currencies may not be what people expect. You could get modest pullbacks in the EM equity markets and 15 or 20% pullbacks in the currencies, and all of a sudden to a U.S. investor who has been the source of most of the inflow into these markets, the total return prospects they're pretty bleak. And now I think if people learned one thing in the last 18 months is don't wait around when things start going against you. I think people may be pretty quick to pull the trigger.
Mike, what are the risks that you see anyhow in bond funds, for example, and gold, and are they really a product of the same thing, that if the U.S. economy proves to be stronger than some people are giving it credit for, well, we may see more inflation, obviously, and we may see some money come back into the dollar?
Yeah, I think there's a tremendous over-allocation worldwide to fixed income, particularly high-grade fixed income, which again was another expression of people's skepticism about the economic prospects here. As was gold. Gold is not entirely in that camp, but I think you have a fair amount of ownership of gold that's predicated on a reasonably sort of down view of U.S. economic and financial prospects. So I think in a certain way, the arrival of good news may prove to be a provocation for risk arising.
Are we going to start seeing credit spreads widen again then in the new year?
No, I don't think it's a credit issue. I think it's an interest rate issue.
Okay.
In fact, Treasury rates probably back up more than corporate rates, so spreads actually will narrow, which I think will be that will be consistent with the tone of the economy, which from the corporate side is going to be a lot better. The corporate sector in the United States is the healthiest sector overall by far.
From a risk-reward standpoint, Mike, what do you think right now is the single best investment people could be making?
I think inward-looking, sort of large-cap U.S. stocks, nothing too exotic at this point. In 2009, it's been possible to match the performance of U.S. stocks with a host of other instruments, and in fact, outdo it in commodities, in EM, in foreign stocks where you had the currency exposure. I think going forward, it's going to be more difficult.
All right. Mike Aronstein of Marketfield Asset Management joining us here to talk about the prospects for investing in 2010.